Dear investor, Edelweiss Private Wealth Management is pleased to present to you the latest issue of Investment Strategy Report for August 2021. Let's take a look at key highlights of July 2021. In developed countries, vaccinations were proactively planned and efficiently executed as compared to that in emerging countries. As a result, the developed economies have recovered much faster than their counterparts from emerging markets. The effect of macroeconomic recovery has been getting reflected in the performance of capital markets as well. Back in India, vaccination drive still lacks the desired level of traction given the size of population yet to get inoculated. In the month of July, various mobility indicators bounced back as the number of COVID cases started to drop. However, the recovery at broader level is still in nascent stage and has a long way to go. Some green shoots are definitely visible in Indian economy, the most important of them being improved employment scenario. Since monsoon has been in line with anticipated average rainfall, Kharif sowing has picked up well. FII interest in Indian equity markets has been subdued in last 3-4 months. Mid-cap and small-cap stocks continue to outperform their large-cap counterparts. Fundamental elements like earnings growth and profitability have shown signs of recovery and are expected to continue despite a probable blip in Q1 financial year 22. However, as indicated by a proprietary relative valuation indicator, valuations of mid and small-cap stocks are inching towards expensive zone. Calendar year 2021 is turning out to be one of the best years for primary markets. Demand has been aided by ample capital and liquidity in the system. Continued lockdowns and slow pace of vaccination are delaying economic recovery, especially when compared with developed economies. However, recovery in corporate earnings, normal monsoons, and sustained liquidity indicate limited downside in equities. Actions taken in China may have a positive rub-off in India. We continue with marginal overweight call on equities. Superlative performance of mid and small cap can be capitalized by booking profits and trimming down the exposure as per respective risk profiles. RBI in their policy meet concluded on 6th August decided to keep repo rate unchanged while continuing with accommodative stance until the growth revives on a durable basis. CPI inflation index has been sticky at level of 6.2% even on 2 years CAGR basis. This level is a shade above upper band of RBI's long-term inflation target. In case of WPI, the rise is due to low base effect and 2 years CAGR is close to 5%. Yields at longer end of the yield curve have spiked in the month of July, leading to slight steepening of the yield curve. Investment opportunities in high-quality credit have significantly diminished. High-yield credit can be considered subject to appropriate due diligence. The credit spreads can be expected to cool off as systemic risks will decrease with recovery in economy. In their last MPC meet, RBI kept policy rates unchanged as expected and continued with accommodative stance, ensuring availability of ample liquidity as long as needed. Yields offered by fixed income instruments are expected to remain soft, while spreads of both AAA and AA are almost unchanged. Dislocations in spreads still persist in high-yield credit, which may be opportunistically used. Core allocation to high-quality credit with diversification across investable credit spectrum in yield-oriented HTM solutions is advisable.